You guys remember the other day when I was talking about how when you live in a neighborhood and you're supposed to keep the place nice, right? But if your neighbor doesn't, then what kind of rights do you have? What kind of things can you do to enforce them to keep the house nice? Because you see, like this house behind me and the one before it is pretty nice, right? Keep the yard nice and manicured, beautiful, and all of this. And then, next door, it's not looking so good. Look at this grass, guys. It's like a foot long. Place is not manicured at all. And this house looks abandoned. The crazy thing is, someone's actually living here because I can hear like a TV on inside. I mean, imagine living next door to this when you keep your house nice. Yard, everything is just total blight, you know? The mosquitoes that come from this, not cutting the grass and everything, must be terrible. I'm sure the neighbors aren't too happy about that. Anyways, this video is not about that. I just figured I'd show you something interesting that I saw right at the beginning of my walk here. There's always something interesting to see. Now, one thing a few of you have been asking me about is this new crazy 1% down mortgage that Rocket Mortgage is offering. And it's actually not just Rocket Mortgage that's doing this. We actually have United Wholesale Mortgage offering a pretty similar program as well. And these are the top two lenders right now that are starting to offer these 1% down mortgages. So we're gonna dive into this quite a bit. I'll give you guys the details on how this works, who can get these mortgages, and why this is going to be just another nail in the coffin for the housing market. Wow, last time I walked past this house, it was practically a brand new rental listing, and fast forward a few months later, it's still on the market for rent. They lowered the price $1,500, but it's still $13,500 a month if you want to rent this house. But here is the real shocker. Look what happens to this house now that they no longer have the homestead exemption for their property taxes. They went from paying $6,599 a year to a whopping practically 25 grand a year, guys. That is like 4 times more practically overnight. That is insane. So basically how these new 1% mortgages work is they are a version of Fannie Mae's Home Ready Mortgage and Freddie Mac's Home Possible loans. After all, the government has this big push on people owning their own homes. It's ever since George Bush was president in the early 2000s. That's part of what led up to this massive housing run-up that we have seen over the past 25 years or so. In order to qualify for this new 1% mortgage, you need to make less than 80% of your neighborhood's median annual income. So if you qualify based on your income, then the next thing is it's actually a 3% down payment, similar to what an FHA loan would be or a conventional loan. But the lender, meaning Rocket Mortgage or United Wholesale, will actually cover the 2% out of their pocket, and then you, as the borrower, only have to put down 1%. Sounds like a pretty good deal, right? Here's kind of the breakdown of how something like this would work. If you were buying a $250,000 house, you need to have 3% down, which is $7,500, and Rocket Mortgage would cover $5,000 of it, and you, as the borrower, would just put $2,500 down. And also, you don't even have to pay private mortgage insurance, also known as PMI. And with pretty much every other type of loan out there, if you put less than 20% down, you have to pay PMI. But under this new program, you don't. And that saves people a lot of money because on a loan like this, just for a $250,000 house, the PMI payment could be an additional $245 a month that Rocket Mortgage is going to pick up on your behalf. And anyone can qualify for this so long as your income is in the proper range. It doesn't matter if you're a first-time home buyer or if you are a repeat home buyer. It doesn't matter how many houses you actually own to qualify for this, which I'm surprised that's part of the deal. But anyways, that's the situation. You just need to meet that 80% threshold of the local median income. Here's one they're marketing just as a teardown. Yeah, never mind the fact that there's actually a house sitting here for sale. We're just selling the land, and by the way, it's for sale for practically $4 million, even though we bought it for 1.9 back in January of 2022. But don't worry, you can go ahead and pay us double. It's a year later after all. Don't you know that property prices double in just a year. Come on, get with the program, guys. Now the crazy thing is, since this is all based on income, you can't make more than 80% of the median income in your neighborhood. They gave a little chart here. The salary requirements are surprisingly high, so a lot of people will probably be able to qualify for these type of loans. In Atlanta, for example, you can't make more than $76,000 a year. Chicago, you can't make more than $84,000 a year. Dallas, you can't make more than $76,000 a year. New York City, you can make up to 90 grand a year, and in San Francisco you can make up to a whopping $120,000 a year and still qualify for this type of loan. Now there's no telling how long these mortgage programs are going to be sticking around for. This is kind of like a pilot program that they're starting to do to see how it's going to work and how much money this is going to end up costing them in the end. But there must be some kind of catch to this, right, Michael? I mean, this sounds too good to be true. Like, you know, people are just going to be getting practically free houses again, right? Well, kind of, yeah. Well, let's look into this a little bit more. First of all, if you're only putting 1% down on your house, it's technically going to be 3% because the lender is going to give you the other 2%. It's not going to take much for you to be underwater on your home, guys. And interestingly enough, this is coming at a time when home prices have seen their first year-over-year loss of almost 2%, like we talked about earlier in the week. And so, for example, somebody could get into a house using this program and within the next few months already be underwater on their mortgage. They actually would owe more on the house than what they would get if they were to sell it and have to repay that loan, which is, like I've told you guys a million times, one of the worst places to be financially with your home. The other thing is, we've seen this all before, guys. During the last housing crash, we saw how this story worked out with people back then, where they put no money down on houses and people were getting into homes that literally had no right to be buying houses. And look what happened. You saw massive waves of defaults and foreclosures come from this, but they're saying that this isn't going to happen this time around because besides the income factor, home buyers will still have to qualify based on their debt to income ratio, and there's going to be no stretching whatsoever or leeway with this when it comes to the underwriting process. So Rocket and United Wholesale are claiming that this isn't going to be a problem because it's not like you can just get into a house like 2008 with basically a pulse. You're still going to have to meet debt to income requirements. Okay, fair point, except what do we know about what's happening right now with debt to income ratios? Lenders are putting people in the homes right now with almost as high as a 42% debt to income ratio for some borrowers. Now think about that. That means 42% of your monthly income in some cases going towards your house payment. 40% in many other cases. So close to half, but don't forget that number, that payment that they're factoring in and qualifying you based on is based on what your payment's going to be on the house the day you buy it, which factors in your mortgage payment, your property taxes, and your homeowner's insurance. Except here's the big kicker. If you've been watching my channel for any length of time, you probably already know that these expenses after you buy the home are guaranteed to go up, specifically property taxes, but homeowners insurance has been rising pretty much for everyone everywhere as well. So you get qualified, say based on $2,000 a month when you buy the house at 40% debt to income ratio, but the following year, now your house payment just shot up $500-600 a month to pay for higher insurance and higher property taxes that you weren't expecting and your lender did not take into consideration when you qualified for that home. So now your debt to income ratio is more like 50%, and that doesn't even include anything that might potentially go wrong with the house. Oh, need a new roof? That's extra. Oh, need a new air conditioner? That's extra. Have to do HVAC work? That's extra. Plumbing problems? Tough, right? So all that stuff costs extra money, and the lenders are not looking at this, okay? They're just looking at How can we get people into houses right now? Because mortgage applications are abysmally low. So I think there's a couple of reasons why they're offering these programs. The first one is what I just said. Because mortgage applications are practically at all-time lows right now, these lenders are trying to find creative ways to get people through the door. And if that means offering some kind of crazy program where they're literally chipping in to help buy the house, then so be it. We need to do this to stay in business, which makes no sense, guys, because like we talked about also earlier in the week, these mortgage companies are losing on average more than $2,000 per mortgage written right now. For these guys to jump in there and pay the PMI payments on behalf of borrowers and give extra money towards the down payment is basically a recipe for disaster for not only the borrower, but also for these mortgage companies. The other reason that this is a complete disaster is because during the last housing crash, we saw people lose their homes who got into these homes with zero money down, not having the qualifications to buy. Well, I think you're going to see this all over again with these type of programs, because the people who are going to be qualifying for these programs and getting these houses probably are in no position to be buying a house to begin with, because if you only got 1% for a down payment and that's what you can afford, then you have no business buying a house, guys. You are a renter, okay? And that's a lesson that we learned from the last housing crash, or at least I thought we learned it. Apparently we didn't, because here we are all over again 15 years later. So my hunch is that maybe, just maybe, this is just a hunch, that their plan with all of this is they'll recover their money on the back end when it's almost guaranteed that the borrower defaults on the mortgage, and then they're going to swoop in, foreclose on the property, and that's when they'll make their money, because they'll take the property from you and sell it, and they'll take whatever profit is left over in that. They're taking on a huge gamble, hoping that this ridiculous situation is going to work out in their favor. I think these lenders like Rocket and United Wholesale are going to end up just doing more harm than good, and maybe even crashing and burning from all of this, and hurting other people along the way, giving people a promise of home ownership that have no business becoming homeowners because they literally can't afford to be homeowners. And I'm all for people owning their own home, guys, but like we've talked about here countless times on the channel, it is expensive to own real estate. Everything costs a ton of money when it comes to owning a house, so much more than people anticipate. And even if you planned ahead and you have extra savings after buying, you can still find yourself in trouble with these extra expenses. And people that can only put 1% down on a house are definitely going to be in way worse shape than people who planned ahead and are still struggling. And if you think that's bad, well, it just gets worse, guys. This other company called Movement Mortgage, they announced this month that they are going to let FHA borrowers who typically put 3.5% down on a home, they're going to allow them to take out a second 10-year mortgage in order to give them that 3.5% down payment. So essentially, people who end up buying homes with Movement Mortgage are going to have a 0% down situation because they're getting two mortgages to buy the house, no money down. This is exactly what landed us in trouble last time. So if after hearing this, you still think the housing market and the economy, everything is hunky-dory, I mean, you're living in a bubble. I'm sorry to tell you. This is the reality. This is not my opinion on anything. This is something that real corporations are doing right now to get people into homes, and it's going to cause major problems as if we don't already have them with the housing market. Rocket Mortgage is even going as far as offering a credit card called the Rocket Visa Signature Card, where home buyers can earn up to $8,000 towards closing costs as like the points for using the card. The card gives 5% back towards these rewards, and the only catch is that you have to redeem the rewards to get a mortgage through Rocket Mortgage, guys. So you can see that really what these companies are doing is they are just saddling people up with debt right now. Debt that most likely they cannot repay, because that's the American way, right? Just borrow to the hilt, max everything out as high as possible, and then worry about it later. And that's exactly what all these companies are doing. So please tell me I'm wrong. Tell me the other side of this, guys. Like, I already know what some of you are typing, like, oh, Michael, this is good. You know, housing's so expensive right now. It gives people a chance to get into the market that otherwise wouldn't be able to compete and buy a home. Yeah, that's exactly the problem, okay? Because if you don't have the finances, I'm sorry. You know, it's just like, here's the thing, guys. Real estate is a pay-to-play game. The more money you have, the more real estate you can buy, the more real estate you qualify to buy, and the less likely you are to default on any of your properties. We already saw that when people have no vested real financial interest in the property, like people who are going to be qualifying for these new mortgages, they are the first ones to send the jingle mail back to the bank, meaning the keys, because they can't make the payments anymore, or just ride it into the ground, into foreclosure, and make no payments for a couple years before the bank actually takes it back, because they have no vested interest. If you bought a $250,000 house and only put $2,500 down to move into it, that's cheaper than a rental, guys. I mean, most rentals here in Miami, if you got a $2,500 rental, you got to put down 3 months rent, okay? So that's $7,500. But no, not with United Wholesale and Rocket Mortgage. That's a thing of the past. $2,500 and you're in. So as you can probably tell from my tone and the way I'm talking about this, I think it's a terrible idea, but at the same time, I don't care, because I know this is just going to lead to the biggest housing crash ever, and it has already begun as far as I'm concerned, now that home prices have turned negative year over year for the first time since 2012, which is a big deal. That's more than 10 years that we haven't seen this happen, guys. But go ahead and tell yourself that everything is fine and that this is going to be great for low-income people and whatever other little stories you like to tell yourself in order to pretend things are good right now. And this kind of just brings me right into my next story about this recession, guys. The same people who say that the housing market is all good right now and things are strong and prices are just going to continue to go up forever are the same people saying that there's no recession, there's not going to be a recession, and worst case scenario is going to be a soft landing, which is a complete lie as well. In the first quarter of 2023, our economy actually grew by 1.3%, and the expectation was that it was only going to grow by 1.1%. So wow, this must mean things are in recovery mode, right? Well, not so fast. And why not so fast? Well, because consumer spending makes up 70% of our GDP in this country. So the lion's share of this improvement is based on consumer spending right now. Consumer spending is up 3.8%, and on things like appliances and cars, it's up 6.3%. And literally within this story, reporting on how great the economy is, well, this is what else they have to say here. They say consumers are the critical linchpin to the U.S. economy, and they're still spending and tapping into savings and credit to be able to do so. That can't persist indefinitely though, and that raises the risk of a more pronounced slowdown or recession the longer the Fed's battle with inflation drags on. They literally say it themselves in this article, guys, that this cannot go on forever. People do not have endless amounts of pandemic savings and credit cards to tap into to keep this consumer spending bubble going forever. We just don't have it. It's not going to happen. At some point, things are going to reverse, and when they do, it's going to get bad. This is how you know the previous listing is completely out of this world delusional, because even this house they've listed for sale at $3 million, and they've already lowered it to 2.6 and no takers, and it's practically the same size house on a marginally smaller lot, and no one's willing to buy this for 2.6, and it's a much nicer house, but yet the people down the street want $4 million. They're crazy. This is why I don't understand why everyone is celebrating that there's no recession, because in case you don't already believe that we're in one, if you still think that we're waiting for the government to declare one officially and that's all we need is for them to say this is happening, it's just getting delayed, guys. It's getting delayed by people buying things that they really can't afford, but they're buying it anyways because of the massive amount of credit that people have available to them. And here's the other thing. Haven't you ever thought that maybe part of the reason that consumer spending is up is because inflation has been raging for a couple years now and things just cost more? So people are forced to spend more than they did before? Ever think about that? Is that a reason why our GDP is not negative right now? Because inflation is high and people need to pay more for things? I mean, to me, that sounds like common sense, guys. That seems like the most logical conclusion to why this is all happening right now. But yet you have people pointing to this and saying, this is why things are good. This is why there's going to be no recession, because consumer spending is up and we're just going to dodge this whole thing. Keep dreaming. As soon as Bob down the street loses his job and is already borrowed to the hilt with the credit cards, can't pay those, oh, and he got the 1% down mortgage too, he's going to lose the house, can't make the payments on the credit cards anymore, bankrupt. That's going to be the story for a lot of these people right now, unfortunately. And don't forget, we still have this debt ceiling crisis that is not resolved yet, and we're less than a week away from the do or die moment with all of this. And like I told you guys in an earlier video, even if we don't actually default, but just getting so close to it is already bad for our country and our credit rating and what this might do to mortgage rates and just make things even worse. Plus, on top of everything else, the betting markets with the stock market has thought now for a while that the Fed is going to pause their interest rate hikes in June because they want to see what happens with inflation and all the data. Well, guess what? Data is in, and this consumer spending that everybody is touting as such a great thing, since that's up 0.8%, that's not good news when it comes to what the Fed wants to see. Remember, their goal is to lower inflation and to see things starting to reverse. And when they still see consumer spending going up, now the betting markets are changing their tune and thinking that there is going to be another rate hike in June. And I think it's pretty likely as well, because things are not happening as fast as the Fed wants to see it happen right now. And the only way to speed it up is more interest rate hikes. I personally think they should have been doing bigger interest rate hikes this whole time, and let's just get there a little bit faster, but they haven't been doing that, and we just have to wait. And that's why some people are saying, oh, there's no recession, there's no crash, there's no anything, everything is going so well. Well, that's just because it might appear that way still. These interest rate hikes haven't really done the job yet, guys. I mean, they've caused bank failures and they've caused mortgages to be more expensive, but it hasn't been enough to really throw us into the deep recession that really is going to be the end result of all of this. But when you combine inflation not going down, job numbers not going down to where they want to see them, as well as this increase in consumer spending, this is all a recipe for more rate hikes, and good for them. They should continue raising rates. Let's put rates at 10%, right? Let's see what that does. But to be quite honest, I'm not really here to convince anyone of anything anymore. I have my thoughts and feelings on how I think all this is going to go down. I know that this is the long game and this is going to take years to play out. And this is not going to work out well in the sense of how a lot of people think it will, that there's going to be this soft landing and home prices will continue going up forever. I don't see that whatsoever, guys. But everyone's entitled to their own opinions, and all the problems that we have and all these things that are happening simultaneously, to me there's only one direction it can go, and that is down. If you enjoyed this video, make sure you click the bell notification down below. Don't forget to subscribe to the channel and like the video, guys. It really helps out tremendously. And if you don't want to wait for my next video, check out this one on the screen right over here, and I'll see you in the next one.